Target and Walmart both had dramatic drops after their earnings results back at the end of May. Target fell about 25% due to the reduced inventory and increase in costs for transportation, while Walmart fell about 15 to 20% due to the increase in higher wages. So being at their 52-week low, let's find out if they're a great buy right now by looking at their fundamentals and dividend stats. I'll also be analyzing their charts to see if there's a potential for them to fall further. Starting off with Target, ticker symbol TGT. Target is in the sector of consumer discretionary, and the current share price of Target is $139.30. From the start of the year, Target has fallen 39.94%, largely due to that 25% drop right here at the end of May. Just within this past week, Target has fallen about 4.5%. Going over to its 52-week range, Target is at its 52-week low, falling from a high of 268. Right down here, Target's market cap is $68 billion and its current PE is 16.19. Over on this income statement, first starting with its revenue, about 5 years ago it was $73 billion. They've been steadily increasing it the last couple of years. We had a spike up this last year at $98 billion, and we kept that new high of $106 billion. Scroll down here for its net income. We can see about 5 years ago, it's been steady close to that $3 billion. We had a spike up last year at $6.18 billion. We kind of kept that new high with a current profit of $5.88 billion. Next, looking at its shares outstanding. About 5 years ago was 536 million shares. They've been buying back shares year over year with a current size of 464 million shares. Now looking at its cash flow, we'll scroll down right here for its free cash flow. We can see here, $3.27 billion. There was a drop here and then rebounded to about $5 billion. And we did have a spike up just like with the revenue and income statement. However, we did have a dramatic drop right here, which is reflected to what I mentioned in the intro. So scrolling up here, there's a reduce in the inventory, which is a big difference between the last couple years. Also with the working capital, as a big drop based on the last couple years. So those two basically are reflected in their drop in free cash flow. Also with the last 5 years, including this big drop, their average has been $4.15 billion. So keeping this in mind, I'll go to the balance sheet to see if they can cover their long-term liabilities. Right down here, scrolling down here to its long-term liabilities, that currently they're at $19.34 billion. So with their average free cash flow, they can pretty much cover this in about 5 years. And also that average, once again, is also including that big drop in free cash flow. Switching over to look at its dividend stats. First off, Target pays about $1.63 billion annually in dividends, and they can definitely cover that with their average 5-year free cash flow of $4.15 billion. Target has a dividend yield of 3.10%, and they'll roughly give you an annual payout of $4.32. Their payout ratio is 28%, and they have a growth rate for the last 5 years of 8.45%, and been growing that dividend for the last 54 years, making it a dividend king. Just comparing the revenue growth with the rest in their sector, Seeking Alpha gives them a grade of D. With a ratio of 7.01%, they're about 52% less than the rest of their sector. However, Target is about 53% higher than their 5-year average, which is a good sign. Next, for its net income, Target has a ratio of 5.48%, and once again is below their sector average, about 16.54% lower. And they are higher, about 20% than their 5-year average. Moving on to the stock analyzer, based on the fundamentals we just looked at, I put in these values and I'll go over them in a minute. But before I show you what I calculate as a fair value, let me know down in the comments what you see as a fair value and whether you're considering adding Target to your portfolio or you're going to be dollar cost averaging down. So first, starting off with the revenue growth, so we have seen a substantial growth over the last couple of years, ranging from 3.5% to 5.5%, kind of being on more of the conservative side, going between these two values here. Now for our profit margin, I'm keeping around the 5-year average, so going from 3 to 5. And then also for the free cash flow, I'm ignoring this last year's value, so I'm going to keep around that 4.5%, so going from 4 to 5. Now for PE and for the free cash flow, I'm doing a range of 12 to 16, and I'll be keeping that same for Walmart. And then I have a return rate of 10%. So scrolling down right here, based on the current share price of $139, I do see Target as being a fair value, being underneath my mid assumptions, which is pretty great. So we're right in the middle of 126, which is my low assumption, and 168. So I definitely do see Target as being a good buy right now. Now I do want to look at its charts to see if there's a potential for Target to fall any further. Over on TradingView, right now I'm showing a daily chart. So this was back in May, the big drop that we had here. And we've been pretty much staying in this range. There was some little resistance here around the 150, and we finally broke through that, and now we're at 140. So now I'm switching to the weekly chart. And I'll be scrolling back here, just look at where there was resistance and also supports back in the past to see if we do fall further, what those new support levels would be. So right here, we are at 140 as I mentioned. So right back here, and this was in 2020. So September 2020 seems like we broke right through there. Right here at the end of 2019, there was a resistance point of around 130. And then of course, all the stuff with COVID, we dropped here, and there was a new resistance point around 115. So we did have around that 115 towards the end of 2019. And then right around March and April, it was staying around that 115. Did break through there, and it was at 125, and then of course right there was at 130. So if we do break further down from the current share price of 140, possibly we'll be going to 130 or even to 115. If you're finding a lot of value out of these stock analysis, let me know by smashing that like button. Moving on to Walmart, ticker symbol WMT. Walmart is in the sector of consumer staples, which is different from what sector Target is in. So the current share price of Walmart is $118.29. From the start of the year, Walmart has fallen 18.22%, largely due to the fall back in May, about 20% right there. Going back this past week, Walmart has fallen about 2%. And next, looking at its 52-week range, Walmart is at its 52-week low, falling from a high of $160. Right down here, looking at its market cap of $327 billion, which is almost 3.5 times of Target. And its current PE value is 18.44. Next on its income statement, looking at its revenue, about 5 years ago it was at $505 billion. So pretty much been staying close to that average here. Last year when Target had a bump up, like a big bump up, we could see a little bump up here for Walmart, but not as dramatic as with Target, and pretty much been staying around that level. But a good thing is that the revenue has been increasing year over year. Scroll down here for the net income. Now looking at Walmart's profit the last few years, we can see it was $8.9 billion, a little drop here, but then we had a bump up to $15 billion. And then the last 2 years we dropped from that new high right there, and pretty much stayed around the same levels these last 2 years. Next for shares outstanding. So we do see Walmart buying back shares. So 5 years ago it was at 2.95 billion, and currently number of shares is at 2.75 billion. And just as a reference back to Target, that Target was in the millions and these are in the billions. So big difference right there as far as the share value. Now over at its cash flow, just scroll down here for its free cash flow. And you can see here, just like Target, there was a big drop in the free cash flow. Walmart has steadily been around that, I guess, 15 to 20 billion kind of range right here. So we did have a drop here in 2019, and then it kind of recovered the last 2 years, and then a big drop right here. So just scrolling up here, as I mentioned in the intro, Walmart had a big increase in wage costs. So you can see here with the working capital, dramatic drop from the $1.8 billion, and now they're $11 billion in the negative. And there's also right here for taxes and then inventory costs. So that's a big difference, about double what it was the previous year, and a big drop from the last couple of years. But those big cost increases had a reflection on what the free cash flow was. And even though we have this $3 billion here, the 5-year average is still at $15 billion. So if we kind of ignore this last year, it's around 15 to 20 billion is the average. So I would say around 18, I would think so, just from these last couple of years right there. So just taking this 15.29 billion, let's go see if they can pay off their long-term liabilities. So over on the balance sheet, just scroll down here to long-term liabilities. And right here, we can see that their long-term liabilities for this year is 63 billion. So they can definitely pay off their long-term liabilities within 4 to 5 years. Moving on to dividend stats. So Walmart annually pays $6.15 billion in dividends, and they can safely cover that average free cash flow of $15 billion. And once again, with that big drop there, their average is probably more in the 18 and 20 billion range. So definitely can safely cover paying their dividends. Continue looking at dividend stats. Their current dividend yield is 1.89%, so that is lower than what Target's at. And they'll give you an annual payout of $2.24. Their payout ratio is 36.74%, so it is higher than Target's. And their growth rate for the last 5 years is 1.98. So that's a pretty low growth rate, because that's lower than the average inflation rate. So really want their growth rate to be higher, especially since their payout ratio isn't in like the 50s or 60s. So they do have some room to grow their dividend if they choose to. And talk about growing dividend, just looking at its dividend growth, 48 years. So they're almost at 50 years, which would make them a dividend king. So comparing Walmart to the rest of its sector, Seeking Alpha gives Walmart's revenue growth a grade of D+. Having a ratio of 3.27%, that's about 53% less than the rest of its sector. However, Walmart is about 15% higher than their 5-year average, which is a good sign for Walmart. Looking at its net income with a ratio of 2.26%, once again, they're below their sector average, having about 56% below. And they pretty much are in line with their 5-year average. So we're looking at Stock Analyzer to determine a fair value. Once again, let me know down in the comments what your fair value for Walmart is. So based on the fundamentals we've been looking at, since Walmart is a lot larger than Target, and also just looking right back here as far as the history stats, Walmart's revenue hasn't been growing as much as Target has. So I chose to just use between 1.5 and 3.5% ratio for the revenue growth. Now, looking over at its profit margin, they have consistently been growing their profit margin, the same with their free cash flow. So I'll be keeping around this 5-year average, being 1.75 to 2.75. And the same with Target, I'm going to be ignoring this past year's free cash flow rate and just keeping on between this 3-point range. So I'm going from 2 to 3%. And for their PE and free cash flow, I'll be doing the same with 12 to 16, as well as a 10% return rate. So scrolling right down here. So with the current share price of $118, and based on my assumptions above, Walmart does look like it's still overvalued. So I'm looking more at Walmart as being fair value between $70 and $100. So I'm going to move over to analyze the charts to see if this 118 is at a support level, or if there's room for it to fall further and get closer to that 100 level. Right now I'm looking at a day chart, and right here in end of May you can see the big drop there. And we pretty much, at least for the last couple weeks, been staying at this support level 118. A little spike up there and then back down. So now I'm changing to the weekly and going to look back in history where other support and resistance levels are. So once again, we have around 118, and you can see going back to 2020, we do have another support right here at 100 and around 120. And right there, the end of 2019, early 2020, the support level is at right at 120. And then we of course broke because of COVID and fell dramatically there. So just looking at these support levels around the 115 to 120, I think is a good spot that Walmart may stay at. If they do break through that 115, the next level it could potentially fall to is right around 100, because I'll be right around here, which is like 103. Yeah, so potential for it to fall about $10 more, I would say. There you have it, my analysis of both Target and Walmart. And remember, I'm not a financial advisor, so definitely do your research before investing in either of these companies. But once again, let me know down below what your thoughts are about Target and Walmart. If you enjoyed this stock analysis, consider subscribing to the channel and also check out my latest video of Home Depot versus Lowe's. Catch you next video. Peace.